On this episode of the InsurTech Geek podcast, we're exploring how insurance is transforming the hospitality industry with Andrew Bate, founder and former CEO of Safely and current co-founder and CEO of Velaris.
The InsurTech Geek podcast is all about technology that's transforming and disrupting the insurance world. We'll be interviewing guests and doing deep dives into specific tech we see changing the industry. We're taking you on a journey through insurance tech. So enjoy the ride and geek out.
Terra. This week's episode sponsor is revolutionizing the world of workers' compensation claims and policy management. Terra's cutting-edge platform empowers insurers with comprehensive benchmarking tools, robust management systems, and an integrated ancillary services marketplace. Discover how Terra is driving innovation and efficiency in workers' comp at terra.insure.
And we are back with another great episode. Rob Galbraith, how you doing, my man?
Doing well, James. Doing well. Just got back off the annual golf trip I take with my college-age son. So he gets a couple of days off kind of right after midterm. So he did tie me on 9 holes for the first time. In fact, he was ahead of me for 16, and I had to put the hammer down just to show him, you know, who's boss in the golf world in our family. But we had a good time. Beautiful area of the country. Hadn't spent much time previously in Arkansas.
Okay, cool. Yeah, see, you haven't quite gotten the podcasting office set up yet, huh?
Not yet. No, I don't know what happened to my daughter's ring light from when she was making YouTube videos when she was 10. So yeah, still working on the setup.
Just got in the new house, still in San Antonio. That's awesome. Awesome. I'm actually joining from the beautiful New York City today. My oldest is a freshman at NYU, and I'm here on Parents Weekend. This is a rare visit to New York City that's not for business. It's actually, although I will end up having meetings when I'm here, so there's still gonna be business while I'm here. It is a wonderful weekend here. A little cold, but I'm excited about seeing some musicals and hanging out with obviously my daughter, but also while she's in class, some business friends of mine and clients that are here. So anyway, it's really great to see y'all with us today. Andrew Bate. Andrew, how's it going, buddy?
It's great. It's great. I'm here in Atlanta. We have beautiful weather today. This whole winter thing happens a little bit later in Atlanta.
Yeah, when I got in last night and I got out the plane, I was like, man, this is like a southern winter and it's fall. It was a lot. It was a lot, and it's still a lot. But I did bring a lot of sweaters and things to wear as I walk around and stuff here. So definitely, I'm ready to go back to Texas on Sunday night for sure already, and get back to my 80 degrees and pool weather. And I'm excited about that. But we're glad to have you.
Thank you.
The InsurTech Geek podcast is all about talking about technology and innovation and insurance. We're going to talk about that in a minute, but before we do, I actually want to chat with you about you because the insurance industry is an industry of people. Your career spanned consulting, entrepreneurship, academia. I mean, what motivated you to start your own insurance companies, and what was the path that got you there that shaped your journey?
Right. The thing I've learned is so few people get into insurance on purpose, but so many people are here and they love it. So my path is similar, like no plans to get into insurance. But I was in the travel practice at McKinsey, the consulting firm. So working with travel clients and I saw this professor I had who I was working with at Emory University. I saw that he owned a second home. And he'd just leave it empty. It was in Wilmington, North Carolina. And he owned it. And it was the most stressful thing in his life. And so I asked, why don't you rent it? It didn't make sense how he could leave this home empty. He didn't go there. And it just sat empty because, it's hard enough to buy one home in life. It's very hard. And then he has 2. And he's very, very smart. So how could he then just leave this asset sitting there? Because, in the travel industry, you don't leave assets sitting. an empty hotel room, a seat on an airplane. Like that is the cardinal sin. These are asset managers. Travel companies are asset managers. You don't let assets go unused. And here this guy is with a house, a really nice house, and it's stressful for him, but he won't rent it. But it's also weird to let internet strangers like sleep in your bed and be in your space. And so that's where I started to solve the problem. Like, what does it take to help a really smart person or all the people who have a second home that's unused for 40, 50 weeks of the year? How do we get them to monetize it? And somehow they need to feel comfortable with who's staying in their house and that they'll be taken care of if something goes wrong. And insurance solves part of that question. What happens when something goes wrong? And so that's where my insurance journey began. Of course, I'm like everyone else, especially from consulting, where it's like, oh, insurance is really easy. You collect some money, you pay some money out, and then there's profit for everyone. And it's just that easy. And oh my goodness, it took 2.5 years to build the program. But I just thought you just go to to the supermarket and you just get some insurance and then you go sell it. And of course that's, as we all know, not the case. I now know that.
You was wrong. It's funny. I thought every year that I'm in this industry, and I've been in 21 years, I thought I understood insurance. Like every year I think, okay, I finally understand it. I finally get it. And then my mind gets unhinged in 3 different ways. And we don't just cover one line of insurance on this podcast. We cover property, general liability, work comp, consumer lines, personal lines, travel insurance, you name it. Like we talk to everybody. And I always go, oh my gosh, there's so much I don't know. Because of course, to understand insurance, you have to understand the operation of the risk you're covering, right? Like so if you to do what you did, and safely, tell everybody what safely was. It was insurance for short-term renters, right?
That's correct. Yeah. So at Safely,
Yeah.
we built a program. We did 2 things. We answered a homeowner's fundamental questions before they think about renting to a stranger. Who's staying in my house? And then what happens when something goes wrong? So we do guest screening. We verify the guest identity, check for felonies, check sex offender lists, and a contributory database of bad guests. These are people you don't want staying in your house without the right supervision. And then the second part of the question is, well, what happens when something goes wrong? And we built a commercial insurance policy that covers the homeowner's liability, the property manager's liability, and then the damages caused by the guest. And so, and then where the technology comes in, and this is pretty unique, is we built the technology to integrate into all of the property management software systems or online travel agencies, online booking sites, so that whenever a reservation takes place, whether it comes through the call center, through booking.com, through Airbnb, through Vrbo, all of that data flows to the master calendar that's held by the property management software system. And that's where our integration is. So we see that reservation and create a mini insurance policy. So our commercial coverage is on only during commercial events. And then you don't need commercial insurance when the home's empty, when your friends are staying for free, when you're there. So you don't need to pay us. So we're on when you need us and off when you don't. Really cheap if you don't have high occupancy, a lot more expensive if you have high occupancy, but then you have a lot more risk to cover.
Yeah, but people don't mess up houses they rent, right?
Never, never. We never. This year, just an interesting number. At Safely, we're going to pay over $1 million for soiled sheets. So people do things on vacation on their sheets, and that's the claim, and it adds up to a big number. It's not much per sheet, but it's a lot of sheets. And
Do you require pictures of the soiled sheets for your claims?
unfortunately, yes. So just wait for your Christmas coffee table book. You're going to see our finest claims, and it'll
I
it'll
feel
be
like,
fun.
yeah, I feel like insurance is the study of human nature. Just in general, right? human nature and Mother Earth's nature. Like
Right.
you're studying these two things because those are the two things that generally either somebody doing something causes something, or Mother Nature doing something causes something, right? So you're studying either
Yeah.
you're either studying weather patterns, earthquakes, forest fires, or you're studying people and their behavior, and it's just a
Right.
never-ending list of you've got to be kidding.
Yeah, it's called vacation brain. It's like perfectly normal people, like somehow they interact with society, they hold down jobs, otherwise they would be going on vacation. Yet they leave the bathtub going, they smoke when they go to bed, like all these things that you shouldn't do, and they just do it. They put things down the toilet, they put things down the sink, and it's just vacation brain. It's like when you go through the security line, the TSA line, and like that person who must have flown like 100 times in their life, they go through the metal detector like 12 times because they have one more thing in their pocket. It's like, do you not know what's about to happen here? You are about to go through a metal detector. You need to take the metal out of your pockets. And it's just like somehow they must be accomplished somehow in the real world. And then once you're on vacation, it just goes away.
It's remarkable. I remember, because I owned a few Airbnbs for a while, and and one time a mysterious black sticky substance ended up on the baseboards of the kitchen, the living room, the dining, and I'm going, and it wasn't on the walls, it wasn't on the floors. It was a mystery black sticky substance. I was like, what on earth did they do? Like, what is this? I mean, you wonder, right? And people flush everything down the toilet when they're in vacation homes, even if you have the signs. Of course, that's a huge source of losses. And I mean, it is a remarkable business to be in. But you built a pretty good brand there. You actually focused a lot of time and attention and grew that pretty substantially. So how long have you been in insurance slash when did you start safely? So because those coincide.
Exactly. Yeah, 2013. We had a different business model before that. It was a booking site where people in the same trust networks, affinity groups, could rent to one another. So if they went to your same university or your same church or they're friends of your friends, right as Facebook opened up their social graph, we thought, well, this will help people rent to people they trust because what I did is I went through business school, and the whole summer between the 2 years of business school, I took an entrepreneurship summer school, interviewed hundreds and hundreds of homeowners, and asked, what happens to your home when you're not there? And they said, oh, well, I never rent it. But then I found out that they would donate it to their kids' school auction or their kids' little league team auction. They'd put something up at church. They'd put something in their university alumni magazine. So they let strangers stay, but they trusted them somehow. So that was the first iteration of this. Like, let's build a site. And, we did launch before Airbnb. So it wasn't like, let's make Airbnb better. Let's make a site where people could trust one another. People who already trust one another could then rent to each other. And we just couldn't get the homeowners to list. They said they wanted to, they didn't quite list. And so that's when we switched to making every reservation a little safer with the right data and the right insurance instead of trying to build a marketplace.
That's really interesting. Well, that's actually a great segue since you mentioned founding in 2013 to Rob's question. Rob?
Yeah, Andrew, we'd love to hear a little bit more about the technology piece that you built at Safely. You kind of mentioned like kind of pivoting right from the booking site to the insurance site. Obviously, kind of coincided with the rise of Airbnb, Verbo, and others. And so, definitely, I think all of us appreciate the need and the market opportunity that you saw. But I'm sure that technology and that seamless integration was critical. So maybe we can talk about some of maybe the key tech pieces or decisions that you had to make to be successful at Safely.
Yeah. Well, I think there are two big like flashes of insight. First one is it's great to have a brother who's a technical person. So my brother is a computer science major from University of Wisconsin. He worked at Home Depot in technology, then Hewlett Packard. He was a master architect there. He went to Publix in their pharmacy, worked there, and so I just am so fortunate to have a brother who lives in Atlanta with me. I'm not with me, but up the road, and and he's the co-founder in Velaris, co-founded safely with me, and so I'm really lucky to have that in the family. Uh, in the family. So if you're starting a company and you don't have a brother or a sister who's a technical person and you're not, then I don't know. I can't help, but no, that was number one. The second though is I thought that we could run all this with a spreadsheet, where if you're a property manager, that's our typical customer. If you're a property manager, just send me your spreadsheet at the end of the month, and then I'll make sure all the like everything gets taken care of. You know, version 0.01 of technology is do it on a spreadsheet. Some people never evolve past that, but still, like with low volume, I can do that all day long, especially if it's tied to a revenue event. And so that was the thought. And then no one sent their spreadsheet. It's like, come on, can you please send your spreadsheet? Can you please send your spreadsheet? Like, how about now? And it's like I can't send this to the underwriter. We can't get these underwritten and covered if if I don't have your spreadsheet. And they just wouldn't do it. And I'm like, it's so easy. You spend more time talking to me, telling me why you didn't send your spreadsheet than it would take you to send it. You just hit this one button and then send it to me. And so that's when we realized we had to be embedded. And in 2015, we built the largest property management system at the time. Was is called Escapia. They're owned by Expedia now. They weren't at the time, and so we integrated with them. It was a long, long integration because it was like I think their first tech partner integration. They're like, we should build a marketplace, all that. They gave us one API guide, then they switched to a different API guide, and we were lightly staffed, and so it took way too long. But we were working with a big organization. This was not a high priority for them, so it was hard. But then it, as the years have gone by, some investors have told me, especially insurtech investors, they said, Andrew, you guys built the first embedded programs way before anyone even called it embedded. But it was embedded because it had to be. It's not because it's like this is a new opportunity. It's like the other way doesn't work. And so it has to be embedded. And then we problem solved, and it's like, oh, we have to embed it into this property management software system. And now Safely is integrated with about 30 of them. So a lot of Stuart's time there was spent just integrating with each one. They all have a marketplace, like slightly different terms. The data is slightly different, but in general the same. But it's a full-time job keeping these connectors going with all the property management systems.
Wow. That's, I can imagine. And especially as property management systems proliferated with VC funding, right? You have a lot of people that piled into that space. So you actually started out with fewer. Certainly that's what we see in the insurance space, is that the number of integrations you have to maintain has grown almost logarithmically, right? Like,
Mhm.
because there's a lot of capital inflow and the tech startups, then now you have to accommodate all the different platforms they might use, which can be quite daunting, right?
It's daunting, and especially the early ones. On an old tech stack. Running on when we were launching some, we were running on Windows 3.1, and like that's hard. It's not like integrating with Stripe where it takes you 20 minutes, 50 minutes to get a good integration going with Stripe. Like they're fantastic. These integrations, I mean, a couple of them are, but the rest, as we were building, as we were all trying to figure out this marketplace ecosystem together, it wasn't like that.
Yeah, that's remarkable. The, the hospitality market's really undergone gone some big changes. Now, I'm in New York City right now. I'm in a hotel. Okay. But travel patterns changed and shifted, right? All of a sudden people discover this new way of very easily renting. We've always had homes for rent, but then you have a very new way of having homes for rent, and all of a sudden volume goes through the roof. And then COVID hits. Can we talk just a minute about COVID and what it did to I'm just interested in what it did to the rental market, and then what it did to your company.
Yeah. Yeah, it was, I mean, COVID, horrible, horrible event, all that. But in terms of travel behaviors, it was very positive for short-term rentals. What happened is, some states shut down, some opened up right away. Florida opened up right away. Georgia opened up right away. So there was, for people who wanted to travel, there was an opportunity to travel. It wasn't like Europe, where Europe really was shut down. US was selectively shut down, but there are enough cool places to go that anyone who wanted to travel somewhere, they could, no problems. Um, but the travel behaviors changed. People were driving, they weren't flying. And so that means they're traveling to the lakes and to the mountains and to the oceans much more than to Las Vegas or Orlando or some of these air destinations. They were traveling locally or semi-locally, 5 hour drive or so. And they're traveling a lot more often because people had more disposable income, partly because of government stimulus, but also because they couldn't spend their money at the restaurants or the hockey games or the movies. And so, like, where am I going to spend this money? And by the way, the one thing you most want to do is get out of the house. And at the same time, hotels, they decimated their quality of service. I mean, first of all, until you really knew what COVID was, you don't want to be hanging out in a box like close to a ton of people. So it made sense that the hotels cut their amenities, but they massively cut their amenities. So who wants to stay there? And then you're probably having to work from where you are. Excuse me, you probably have to work from where you are. So you don't want to be sitting on your bed with the kids right over here, and then you're perched on your Zoom meetings right here. You need a little bit more space. So people are disproportionately choosing to stay in homes. And so what that did is it made home rentals go from early adopters, or like the loyal people who were like, I only rent a home. This is how I travel. And you probably knew a few of them, but they're weird and they're like a little too evangelisty about staying in homes. And now it's just normal. You talk to younger people and they're like, we're Airbnb. Like, that's why would I go to a Hyatt? Why would I go to a Marriott? We're Airbnb. Like, it's so easy. It's just how I travel. And so that shift happened where people realized that their homes, for certain types of travel, homes are way better than hotels. Hotels are better for others, but some it's they're way better. And so it just, like, home rentals got their share of travel accommodations during COVID, and it was normalized. What it also did, and this kind of is how it also helped safely, is COVID helped the property managers do well. So the property managers started to feel good. Their rates were going up. They had long booking windows because occupancy was high. So you had to book 6 months, 8 months, 12 months in advance. And they were feeling pretty good. So they're in a bullish business mode where they want to build a business. So they're a lot more interested to talk to service providers like Safely, like a revenue management company, like a new property management software system, the whole stack of technology that helps the vacation rental ecosystem. They're just more willing to invest because they're in growth mode. And that's what really helped us. I mean, we had a product that really resonated with them, but at the same time, their attitude was right. And so for a 2-3 year window, it was really good for everyone in the industry. And now it's pulling back. Like, if you were in the industry in 2019 and you saw where it is today, you'd be like, holy cow, this is amazing. But people are feeling like it's a really rough time because we're not quite at the heyday anymore. You can book last minute. You can find deals. Occupancy is down, and it's still above where it was before, but it's just it feels a little sluggish right now, even though it's, by any comparison, it's doing.
Yeah, but the reality is that it's not as good as it was, and I can tell you from my own experience, being a short term rental owner for about 10 years. I'm no longer. I'm out of the short term rental space because Airbnb and Vrbo squeezed down on the property owners hard and slapped on extra fees and penalties and really made life miserable. Never backed you. This is why short-term rental insurance needs to exist, because they never backed you in a claim ever. Ever. They claim that Airbnb claims they have air cover. They never pay out a claim on air cover ever, no matter what. It is BS. And so that, you have that going on. Then the local city councils hate short-term rentals. The neighbors hate short-term rentals. The states cracked down on it and that it started taxing it more heavily. and they really made it miserable to be to be an owner. And so you really now need short-term rental insurance in addition to your house insurance, right? Because there's two policies, one for the house, one for the rentals. And then, you really need a legislative affair. Like, you need to be in an association that's lobbying the state. I mean, you got to run it like a business now. It's hard to casually do this and do it well. The city of Houston just sent out $200 fee assessments to every single house they found on Airbnb in the city of Houston. That happened last week. So I mean, and you don't have to register. They went on the sites, found the addresses, and mailed the assessment to all the houses. So it's it's for real. I want to kick it back to Rob now. Rob, what you got?
Yeah, Andrew, I kind of wanted to have you talk about, I know you recently left Safely, so you have a new startup, Velaris. So maybe you can tell us a little bit about just this transition and kind of the new project that you just are launching.
Yeah, absolutely. And so, I left Safely partly because I wanted to think even bigger. How do we make a bigger insurance company? And the challenge at Safely is we're selling a product which performs very, very well, but it's optional. You don't need it. You should have it, but you don't need it. And I had a lot of property managers coming to me and asking about regular insurance. You, how do you get your general liability policy and 5 or 6 policies that a typical property manager has? A hotel has 11 or 12 policies. Like, how do you get them? Because what happens is they don't spend a ton of money on insurance. They spend maybe $50,000 or $100,000 a year on insurance. And that's not enough to break in and start to work with Aon or Marsh or some of these great brokerages. So they're working with their local broker, which is fantastic. They're the smartest, hardworking people, but they're working across 50 industries. And I kept hearing of so many corner cases that should have just been covered. It's like, if you're in short-term home rentals, there are just some things that should be covered: shared swimming pools, golf carts, some advertisers' liability programs where the pictures that are taken, that are being published across the internet, you have some protection in case that photographer comes back and sues you. Like, all these stories that I heard, it's like, no, there's coverage for that. You just weren't quite matched up with the right program. And so I really believe that selling to small businesses, two things need to happen. First, I think there needs to be industry specialization, not regional specialization. We got, like, a property manager in Montana is very similar to a property manager in North Carolina, and is not very similar to a veterinarian in Montana or North Carolina. And so I really think something can be done to standardize and productize the insurance policies that small businesses need, focusing on vacation rentals, focusing on hotels. And I think we can do a lot to really confidently sell to them, but then also use AI to make the policy comparison easier, to help understand the complexity of policies a little faster. As we're talking to potential customers at the top of the funnel, we can be presenting some, like, comparing policies a little bit earlier if the policy comparison process is easier, again with AI and other just technology tools. And so that's number one. I think industry specialization is really important, and I understand the hospitality space, so let's get going there. And then the other thing is, I think you need MGA capabilities, whether it's your own policies that you build, or you find other MGAs and bring those policies out. They're just, an industry has so many unique policies that, and we built a bunch of them at Safely: credit card chargeback, bed chargebacks, refundable rates. Like, how do you get coverage when the guest cancels within a small window, bed bugs, things like that. And there needs to be this MGA component as well, or new policy creation. So I really believe it should be like going to Costco, where there's the Kirkland brand and then every other brand, and whatever works for you, you go get it. But we're not seeing the carriers build these smaller bespoke policies that the MGAs are building. And so I think you need to, like, when you are excellent at an industry, you need to be an MGA plus a broker, and then you need to distribute it however it needs to be distributed, uh, through embedded programs, episodic programs, one reservation, one night, one house, whatever it is at a time, or as an annual policy and through a broker, through a software system, through an OTA. And so that's what we're building.
Awesome. So let's talk about the insurance side. Like, what are, and you don't have to disclose confidential information about your company, but like, what are loss ratios? This is what I'm always curious about. Like, what are the basic and combined ratios? Like, how are the loss ratios? Is this a good insurance product to be in? And what does this look like? Do you have like a long tail? Is there a bunch of claim development? Is this, you can close and resolve all these quickly? I mean, tell me about the insurance side.
Yeah. So at Safely, our underwriter is Greenlight Re, and they've been amazing partners. They told me that their underwriter said their guideline for risk is like it has to look like Safely, and like because there are a few characteristics of this risk that are they're awesome. First, there's no tail or almost no tail, because once the reservation's done, the guest leaves, like the liability ends. It's not like you know a life insurance claim or something like that. Like your liability ends. Now you might find out about a bodily injury over time, but in general, those get reported pretty quickly. Because if someone thinks they're hurt, they're going to mention something quickly. Otherwise, their claim isn't as valid if they make it 2 years later or something, right within the statute of limitations. So very short tail. Um, you know, the loss size is in general quite low. It's hundreds and hundreds of dollars for an average claim, because it's the guest caused damage. And so if the ratio's wrong, the underwriting is wrong, we can adjust it pretty quickly, um, because there's a new reservation coming up. All right, all reservations after today, they're going to have these terms, whether it's an exclusion or it's going to be a price increase or a price decrease. We can move it pretty quickly. So that part's good. And then there's no catastrophic risk because we don't cover, James, as you're mentioning, the natural acts. We like at Safely, we don't cover acts of nature. So the most correlated events you'll see are like the Super Bowl or something, where a bunch of people happen to be in the same place and party, the World Cup, Coachella, something like that. But we're not seeing it. Like people are normalizing how bad they are everywhere. So, we're not seeing much there. So there's not really much correlated.
You're saying literally bad behavior is normalizing?
Yeah, yeah. I mean, it's still bad and it's still happening. It's just like we know when it happens.
You're like the litmus test of bad behavior. It's almost like humans save their worst for when they're on vacation, and you get to pick up the pieces.
This is true. Like they can't behave like this in the real world. Some of them, most people are great. It's great. But I mean, low severity in general. I mean, we still cover a lot of reservations up to $1 million, and we pay out to the limits, because when things happen, you need insurance, and we're there, and it works. And that said, we're our capacity providers have had no problems. We've tweaked the program with them, but it's a loss ratio they're comfortable with.
Yeah, I know. Just thinking, Andrew, it's not necessarily correlated, right, with other sources of risk. To your point about the catastrophic or a lot of stuff isn't going to necessarily be correlated. And even if it is, to your point, like a localized event like the Masters, right, or something like that, where, I think I could see the attractiveness of it for sure. Right. So it totally makes sense. So I'm just kind of thinking, you mentioned AI, right? And some of the capabilities that you're looking at for Velaris. Like maybe we can just talk a little bit more broadly about like the technological change you've seen over the last decade and what's got you excited for the next decade.
Yeah. I mean, the change is just, that SaaS is everywhere. I mean, people are running their business on SaaS platforms everywhere, every industry, whether it's us running it on HubSpot or our property managers running it on their favorite property management system. That part's pretty amazing. And then what hasn't happened yet is I think we keep calling startups or technology companies by their technology versus the value they create. So like, sometimes people confuse us for being a SaaS company, and we're not a SaaS company. We're an MGA. We're an insurance company, and we need to follow insurance company rules, not SaaS company rules. And I think it's easy to get confused by like what's being hyped and what's being successful, but where are you creating value? Like in the late 90s, there were HTML companies. Like we all use HTML now, and now they're AI companies. But guess what? We're all going to use AI in 6 years. It's going to be as ubiquitous as HTML or SaaS or whatever is. So I don't like we seem to have these eras where we define the technology that changes business models, but I think sometimes we forget about the actual business model that's there. So what does a brokerage look like in 6 years versus what does AI look like in insurance? So how does a brokerage run using all available tools, all available advantages they can get? And I'm really bullish on insurance because I think the regulatory compliance and just the relationships that are required are going to, it means people like us have to keep running them and being the ultimate person in charge versus having the AI take over, whereas in other industries they might take over a little faster. So I think we're going to have a good period where some pretty motivated people can be supercharged, and that's exciting to me. And then where do we want to use it? I mean, certainly claims. Claims we definitely need to use it there, especially with our small severity of claims like that needs to be handled very well. I mean, the claims team at Safely is fantastic, and we've gotten the cost per claim to be quite low, but at the same time, these adjusters could be a lot happier, a lot less stressed, and a lot more productive if they had everything presented to them and they're the final check instead of being instead of going through every claim as a new claim. So that's why I'm really excited. I'm also really excited at like getting the actuarial work to go faster and be more where you could do it in a more speculative way. It was like I just have an idea. Let's see what happens with our data instead of having to commission a study, pay $15,000 to someone who doesn't quite understand what you're doing, but they have their data sources and then they cobble something together, and it really slows product development and it puts a really big barrier on like random ideas that we all have. But you never do it because you can never get the actuarial support, and then you can't present it to your underwriters to like really buy into it. And if they never buy into it, even if they build the product with you, it's probably going to be a lame product because they're too scared because they don't understand it. I can't quite understand it in the right way, or I can't explain it in the right way. And so it really slows product development. So I think there's something about just getting that actuarial study or new product development going a lot faster.
Okay, cool. Let's wrap up our conversation with this. What is the single one or two things in technology you're most excited about that you think are going to impact your business going forward?
I really think it's embedded in finding new ways of distribution. So it's distribution, not embedded. How can you distribute better? Because look, there's risk everywhere in this world. Everywhere, everything we do. You don't buy an insurance policy for all of it, but why don't you buy an insurance policy? Because they're sold as an annual policy with a deductible, and it's just not feasible to sell it for everything. But the more you can like be creative about creating new policies, whatever that means, there's more and more risk you can mitigate. And so that takes embedding. It's probably easier to embed into the digital world than the real world, but somehow like, there's just so much opportunity because there's so much risk, and so there could be insurance for it if it could be created in the right way. But it usually can be created in the right way. It just needs to be distributed in the right way. So I don't know how technology does it, but that's where I'm most excited. Like embedded everywhere.
Embedded everywhere. Yeah, as with all businesses, it's about distribution, isn't it? You gotta get the product in the hands. I tell you, if travel insurance wasn't embedded when I'm booking certain tickets, I would never buy it. I just would never buy it. I just wouldn't. I wouldn't think to, or have the time to contact somebody and go through it. So, well, look, it's been a wonderful conversation, Andrew. Thanks for being a guest. Also, thanks for being a good friend. Glad to have you on the show, and I'm so excited about the new venture. I'm stoked and fired up, and every other word that you can describe for what you're doing. And I wish I would have had you as an insurance provider in 2015 when I got into my first short-term rental. It would have changed my life in a very positive way. I would have had to fight all the bogus Airbnb air cover denials that they gave me. I would have just said, "Hey, it's okay, I'm covered. I'm not worried about it." But I really appreciate what you're doing, and thanks for being on the show today.
Absolutely. Thank you, James. Thank you, Rob.
And Rob, as always, brother, thank you for co-hosting and continuing to be the most interesting man in insurance. Good to see you.
Yeah, I appreciate it, James, and thanks for being on, Andrew. Fascinating conversation. Love your perspective. You kind of have this innovative mind that you've brought to the insurance world. I love it. Thank you.
Thank you for tuning in today to Geek Out for our interview with Andrew Bate from Velaris. See you next time.
The InsurTech Geek podcast is all about technology that's transforming and disrupting the insurance world. Hosted by James Benham at jamesbenham.com with co-host Rob Galbraith at endofinsurance.com. The show takes listeners on a journey through insurance tech. So enjoy the ride and geek out.